right, everybody. We're going to have John Jacobs come with us here. We're going to talk about the evolution of institutional capital over time. And John's got a unique story. He's been was the executive with the NASDAQ and the chairman of Vetify.
Thanks, Christopher. I appreciate it. Hello, everybody. I'm delighted to be here today. Very excited to talk about this. So, quick question. Anybody out there does not believe that Bitcoin exists today? Anybody out there doesn't think Bitcoin will be around in 5 years? The point is, cryptos are here. Cryptos will be here. And I think it's incumbent upon all of us to continue to push forward for a rigorous, transparent way to invest in traded cryptocurrencies. And that's what our panel of experts is going to talk about today. So to my immediate left is Stephen McClurg. He is the CIO and co-founder at Valkyrie. And then Simeon Hyman is the head of investment strategy at ProShares. And then Chris Davis is a partner at Gray Reed. So I'm going to let them introduce themselves, and then we'll get right into it. So, Stephen, why don't we start with you?
Yeah, hi, I'm Stephen McClurg, the co-founder and CIO of Valkyrie. We are a ETF company and a actively managed hedge fund focused mostly on Bitcoin and Bitcoin-related activities.
Simeon Hyman, I'm the global investment strategist and the head of the investment strategy group at ProShares. We are a top 10 ETF provider. We have a full suite of inverse and leverage ETFs, a suite of dividend growth ETFs, and we're the world's leader in crypto-linked ETFs.
Is this working? Okay, I've got one. My name's Chris Davis. I'm a partner with Gray Reed. We're a Texas-based full-service law firm. I co-chair our digital asset and blockchain practice. And before coming here, spent about a decade at the SEC, which is kind of where I whet my appetite with crypto.
Great. Thank you, guys. Appreciate it. So for those who follow this space, and everybody should, hopefully we're going to see the first fund on Bitcoin itself come out. The SEC will approve it. A lot of applications, a lot of firms. But in the interim, we have a lot of ways to invest in Bitcoin now, in addition to just buying Bitcoin. So I think we'd like to start off there, and I'll ask all three of you to weigh in on this. Why is it important that we have these different tools to invest in Bitcoin? So, Stephen, you want to kick it off?
Sure. So, I'm a big fan of choice number one, and that is holding your Bitcoin in your own wallet, on your own device, using your own personal keys, private keys. Not everybody is technically proficient to be able to do that, including myself. I do it, but I'll probably lose it. And some of the smartest people I know that are Bitcoiners for over a decade have lost their private keys and have lost their Bitcoin. Or so there should be a lot of different ways, and there should be ways to diversify your Bitcoin strategy. Not just private keys. I'm not a big fan of holding on an exchange. It's a good place to get them, but I wouldn't hold them long term. And really for investment professionals, the best way is through an ETF or a mutual fund or a private placement vehicle. So, right now, void of a Bitcoin spot ETF, there are a couple of different ways to do it. The way that we do it at Valkyrie is through a Bitcoin miners ETF. Now, that's not holding Bitcoin directly, but that is investing in publicly traded miners that mine for Bitcoin, and it gives you an opportunity to get some of the same results that mirror Bitcoin without holding Bitcoin directly, or through a private placement vehicle.
Well, we're the Bitcoin futures guys. BITO or BITO is our fund. It's the world's largest crypto-linked ETF. And look, the ecosystem is important. The more ways to access this asset class, the more liquidity will be there. In the futures market, it's a regulated place. There's a central clearinghouse. You post margin. There's more volume in Bitcoin futures than there is in the largest U.S. exchange. So that's an important place for volume, price discovery. And also when you put the regulated futures in an ETF, it's a place where you kind of don't have to worry about the exchange stuff. So an important solution. There are others. But the more solutions, the better the market will be.
Yeah, and the thing I'll add from my perspective, dealing with, average investors on a daily basis now, and having dealt with many of them for 10 years at the SEC, A lot of those people don't like to manage their own money, right? And if you don't want to manage your own money, you sure don't want to have to deal with setting up a wallet and holding Bitcoin yourself or whatever crypto it is that you want to hold. And so for those people to be able to go to their financial advisors, having heard about this type of product, just like they've heard about other types of products, a lot of investors want to invest in precious metals, right? But they want to go do that kind of through a one-stop shop with some guidance from a financial advisor. So the tools that these guys have created and gotten approved through the appropriate regulatory bodies, which is no small task, opens up that world to those types of people. So it kind of makes it available to the average person who's just not going to go through the hoops to own it directly.
I think that's a great point. I mean, you look at, if you want to invest gold, you can buy gold and have gold in your house or gold somewhere, or you could buy the gold ETF and get the same exposure to that asset class, but in your brokerage account like you buy anything else. And Stephen, you made a great point about the wallets, right? So the TBC did a survey and found that in Texas, people over 65 years of age, only 6% owned a digital asset. And I think that I'm 64, so I know my peers, a lot of them, they don't even want to think about getting a wallet, doing private keys, the public keys, all that kind of stuff. But if they could buy it in their regular brokerage account, if they could buy it in their Morgan Stanley or Robinhood or whatever account, that's much easier access, which I think has been why your products have been so successful. So, and the other thing is this panel is about investing and trading, and they're different people, right? Different time horizons. Traders want to trade, right? That's been a lot of the history of Bitcoin to date. But investors want to invest for a longer period of time. And I think by providing a series of products, you're giving tools to all those people, and that's how you build a robust marketplace. So, Simi, let's talk about the BITO. It's a $1.5 billion product today. How does it relate to pricing and everything else? How does it relate to Bitcoin itself?
Sure. So BITO uses Bitcoin futures to get exposure to Bitcoin. And I'll give you I'm going to take about 92 seconds to explain how this works and why it's important. Because I'm in Texas, so a lot of people know things about commodity futures. But there's a big difference between a financial future and a commodity like oil. Many of you may remember the beginning of the pandemic when oil futures went negative. But that's because you got to store it somewhere. You got to stick it in a tanker. You got to put it somewhere. You don't have to do that with financial futures. And therefore, what the academics say, and this is pretty close in real life, is that a futures contract, say 1 month from now, the premium over today's price of Bitcoin in this example should be the short-term interest rate. Now everybody says, well, roll cost, the cost of going from this month's contract in Bitcoin to next month's, has gone up. Well, that's because Fed funds went from 0 to 5%. Now, here's the secret in BITO. In BITO, we use the futures, but we hold a bunch of cash because you want to, in quote-unquote, fully collateralize the position, meaning all we're doing is providing $1 worth of Bitcoin exposure for $1 invested in the fund. And guess what that cash earns? It earns that same short-term financing rate. They offset one another. Is it perfect? No, it's not perfect. But since the inception of BITO over 2 years ago, on an after-fee basis, we're about 2% behind Bitcoin over that full 2-year period. We'll call that a pretty darn good victory in a very volatile asset class.
Stephen, I want to go back to you and talk to you about your miners product for a second. So I'm old enough to remember before we had the internet. And when the internet came out, all those early internet companies, none of them survived. None of those models survived. Who survived, though, were the companies that built the infrastructure for the internet, right? And I think that's what you guys have done with your miners product. Those are the people who are mining for cryptos and Bitcoin and cryptos, et cetera. How is that structured? Are there public? How do you invest in those companies? How do you give investors exposure to the miners?
Yeah, so what we did was, there were a few of us that decided to launch Bitcoin miners ETFs at the same time, and the other two decided to focus on a very passive index-based strategy where it was publicly traded miners and where their market cap or some other way to look at it. And myself and our team had been around the ecosystem long enough to know that miners fail all the time, or mining companies fail all the time. Some of them last, some of them don't. And usually the halving is when you find out who's an efficient operation and who's not. So we decided to go the active route, and it worked out for us. So the way that we are looking at it is, about 80% of the portfolio is directly into companies that mine for Bitcoin, and then the other 20% might be chip manufacturers or other types of companies that build a lot of the hardware or products that the miners use. So we really are more focused on the picks and shovels side of Bitcoin, and anybody that's been around long enough knows that really mining is the core of the ecosystem. So that's where our focus has been, and things have changed a lot in the last 4 to 5 years. I think 5 years ago, if you look at hash rate, you could really tell who's going to make it, who's not, who has more hash. And it's really transformed a lot, where a lot of the bigger Bitcoin mining companies have shifted more to a focus on energy and becoming energy producers that happen to also mine Bitcoin with the excess energy, and then they're energy brokers for the rest of it. So that's a really interesting play that's popped up, particularly in the state of Texas, where a lot of these miners are supporting the grid. So that's been a significant change in the last couple of years. But yeah, going back to we're really focused on the infrastructure, on the hardware, in some cases the software. But we feel like that those are businesses that that are going to be a lot more long-standing, as opposed to just speculation on the price of Bitcoin or some other cryptocurrency that comes out. We do believe that Bitcoin is going to be a long-term great investment thesis, but the infrastructure is a really important part of our thesis.
Sure. So Chris, we talked about Bitcoin itself, options on Bitcoin, futures on Bitcoin, a fund on futures on Bitcoin, a fund coming up on Bitcoin. Just to use Bitcoin as one example, I cannot even imagine the alphabet soup of regulators involved in all that, which is why it's probably taken so long to get that full ecosystem. Can you talk about that complex regulatory system that's involved today, and how that is kind of all works together or doesn't work together? So
yeah, I think there's two things, right? There's the varying levels of regulators, and then there's also the level to which certain regulators have been willing to be willing partners in this thing, right?
Right.
I think most of us would admit the SEC has been a tough nut to crack in this space. Y'all did, again, to your great credit. But look, the SEC is kind of at the top of the food chain, at least when it comes to these markets, right? And then you've got market rules that you may have to comply with. For instance, on some of the spot ETFs that are out there trying to get approved right now, they first had to go through a process with the markets, and then they have to get the SEC to bless them for listing as well, which is where you've seen, the kind of public fight going on with Grayscale right now. And then you've also got a layer of regulation with SROs, like FINRA's the most prominent, right, between the firms that actually want to make these products available to their clients, and then the individual brokers within those firms, right? Because I mentioned the retail investor earlier. If you're going to recommend a product to your investor, there are FINRA rules that require you to understand that product. And it requires the firm to understand that product before it can be approved for that broker to recommend that product to the individual investor and recommend it in the right amount. And so all these regulators as well, the SEC has had task force focus on these things. FINRA has had a crypto task force. These things have been exam priorities at both the SEC and the FINRA level. I think a lot of this is because it's a new product. A lot of it's because it's not a product that's completely well understood yet. You saw these things with earlier cutting-edge financial products way before crypto ever existed, right? When I was there, the SEC had exam priorities around collateralized debt obligations and things of that nature, right? So this isn't new. It's just the growing pains, I think, that are associated with this asset class right now.
It's a new asset class, and it has a different history than a lot of asset classes had, right? And, when I look at it, and again, being around for a while, you see that, you got the futures and options products regulated by one entity, or the futures by the CFTC, and then you have the SEC, as you said. You have the exchanges for Bitcoin, the exchanges for the funds, the exchanges for the futures, the exchanges for the options. There's a whole gamut of things out there. I want to come back to you, though, in a minute. I want to get another topic, come back to you, because I want to talk about how challenging it's going to be for firms to sell these products. You touched on it with FINRA, but also they got to train a whole new cadre of CCOs. And so I want to get back to that in a second. But so Stephen, what are your investors looking for? What do they really want in this asset class? What do they look for?
Yeah, I think they want. I think they really want diversification. If you look back, and this is something I learned being in more of the traditional finance markets, managing bond portfolios and other types of portfolios, is the typical 60-40 portfolio has essentially failed.
Right.
And it's a real simplistic way for people to explain where you should be, but I used to manage money for pension funds and life insurance companies and sovereign wealth funds, but particularly on the insurance and pension side of things, it's very difficult for a pension fund to hit their 8% target year after year after year, or an insurance company hitting their 5% target year after year, especially when interest rates dropped for a long period of time. So what they had to do is begin to barbell their strategies out, where you hold a few fixed income instruments that don't quite get you there, but also some really risky assets. And they're always looking for new things to put into a portfolio that makes it non-correlated, or that is non-correlated, to add the portfolio so that you can survive in times when your yield doesn't quite hit, and it doesn't matter if it does. So Bitcoin is a really interesting instrument to a lot of institutional investors. And right now, and look, a pension fund's not going to go and open up a Coinbase account and have some 22-year-old guy, trade Bitcoin for them. I know a lot of people that do that, but not pension funds, not insurance companies. And they're just waiting for that validation of a spot Bitcoin ETF, because there are instruments available. Institutional investors, by the way, a lot of people are saying, well, when spot Bitcoin ETFs come to market, all the institutions are going to start buying it. Well, that's actually not the case at all. Insurance companies, pension funds don't buy ETFs.
Right.
They purchase through separately managed accounts and private placement vehicles. But until that validation is there through a public market vehicle like a spot Bitcoin ETF, they're going to be hesitant.
Right.
And things like FTX, when it collapsed, made a lot of investors very hesitant to even be in private vehicles, because they don't know if the person they're investing with is the next Sam Bankman-Fried, right? So they don't know. So this will create some validation, and also enough time has passed since that last fraud.
I couldn't agree more. So Simeon, you got 1.5 billion in BITO, and that would have been 1.5 billion into directly to Bitcoin, but people flocked to your product, right? When they still had the other options. And it's a futures-based product, right? So do you think the people in BITO are more short-term focused? Are they traders? Are they investors? What's the mix, and what are they looking for
So I think both are there, and you want both of them in the product. And it's funny, having spent time on the wealth management side, on the other side, I know that as an ETF provider, sometimes you might, if you have a new product, you could tell a advisor, hey, don't worry about things like bid-ask spread, because you'll get a create. In the ETF market, if you put a few $1 million into an ETF, new shares will be created. But that's only half the story, because sometimes your big client's going to go buy a yacht and they need money tomorrow, and the short-term people need to be in your product, so it's trading all the time. Now back to the Bitcoin futures space, what's very interesting about futures is a couple of things. Number one, there isn't just one price of any cryptocurrency. There are multiple prices. The futures market resolves that because futures are settled at an amalgamation of multiple exchanges. The other thing is, I mentioned this before, there's a bunch of academic evidence that says that price reflects information even faster in the crypto future space than in the spot market. Now, I don't think that's weird. Imagine the bond market. Many of us know that price shows up in credit default swaps before it shows up in cash bonds. So again, the ecosystem is important. We think that they're both long-term and short-term folks. And the other thing that I think people also want in terms of crypto exposure is choice. So we at ProShares, we launched our Ether Futures ETF, EETH, just about a month and a half ago. But also very importantly, we also offer BITI, which is short Bitcoin, and SETH, affectionately known as SETH, on the short side of Ether, because it's really hard to short cryptocurrency, and particularly in this audience where I think there's some folks who will often find themselves on the long side, and you could be bullish over the long term, but maybe there's an event happening and you need to hedge some risks. So there are lots, I think investors want to have that kind of optionality in their toolkit with regards to their exposure to cryptocurrency.
So Chris, I'll circle back. So we talked about all these different products, and assuming we have the spot Bitcoin ETF out there soon. So let's put ourselves in the shoes of someone at all these financial advisors out there. They're going to have to now talk to their clients about everything from suitability to which product and how and where and how that fits in, et cetera. And are CCOs of these firms ready? Are the chief compliance officers ready? Is FINRA ready? Is the industry ready for this becoming a mature asset class with a veritable whole spectrum of products?
So with respect to CCOs, I think it depends on the firm. I think you've seen firms, big firms, Fidelity, which is right up the road, which has been in this space for years now, and I think has institutional expertise where they've got people who are ready for it. I think you've got smaller firms who have been in the space and have that kind of niche expertise. Do I think it's there across the board? Probably not, for some of the reasons they mentioned, right? I mean, there are a lot of people that if this isn't ready for the here and now, they just kind of tune it out, right?
Right.
But I do think if you have this wave of approvals that everybody anticipates, I think it's going to be great for the asset class as a whole. Because if this becomes something that's part of everybody's portfolio or part of every pension fund or things like that, I mean, we're talking huge amounts of money, right? Even if you're talking 2 to 5% as just a component of a balanced portfolio.
Right.
So that's part of it, and that's when people are going to have to learn, because there will be a market for this stuff that will be consumer-driven, investor-driven, to where they're going to have to learn. And there are those obligations as a compliance officer. You have to understand the products that your firm is offering. As a broker, you have to understand the products that you're recommending to your client. And by the way, these types of products are going to make it easier to understand. It's a lot easier to understand a exchange-traded product, because these guys trade in exchange-traded products all the time.
Right.
I mean, as we discussed earlier, there are precious metals exchange-traded products. This is really no different. There are currency-based exchange-traded products, right? And short products that allow you to hedge. Same deal. So I think once it becomes mainstream, the learning curve is going to be shallow, not steep, but I don't think a lot of people are ready for it quite yet.
I mean, I agree. And to really be bullish, this is going to be a major part. This is going to be a allocation across the board of every kind of investor and trader there is. And remember, we're talking Bitcoin here only because that's the first one that's going to have this full suite of products. Ethereum, everything, that's all going to follow. It's going to be, cryptos is going to be a asset class, absolute asset class. So the firms that are aggressive and invest and are ready and really figure out how to do it right and things like that are going to, I think, capture more of the assets early on, because they'll frankly be able to aggressively talk to customers and clients and things like that and get them the exposure that they clearly want. This whole panel is about people want exposure to this asset class. So I think we got a couple of minutes left, and I have no idea how we're supposed to handle questions from the audience because I can't even see the audience with the lights. So are there questions out there that somebody wants to ask? Can you tell? So just yell, raise your hand, stand up. Okay. All right. We'll keep going. So, all right. So given that point, how soon after we see the Bitcoin spot ETF, do you think you're going to see? Some of you guys already have some products on Ether as it is. The rest of the more cryptos coming, and is there a limit? I mean, is it going to be 10 cryptos? It's not going to be 1,000 cryptos. So, Stephen, why don't you weigh in first? So, what do you think?
I don't think we're going to see a whole lot more beyond Bitcoin in the United States.
Okay.
We'll see a few more. I actually take the view that a lot of cryptocurrencies that exist were probably launched as securities. I disagree with the Ripple case, the outcome of the Ripple case. I believe that was a security, or at least launched as a security. I probably will not make a lot of friends by saying this, but I feel like ETH was probably a security as well. So it's very difficult, in my opinion, until a lot of those things get sorted out, right, for anything beyond Bitcoin. And I think ETH has just been grandfathered in. That's really the case there. And so I think Bitcoin and ETH is probably where it stops for a pretty long period of time. I mean, there are some other cryptocurrencies out there that I don't believe are securities, Litecoin, for instance. But it's just not. There's just not enough of a market there for it to matter in a in an ETF format.
Simeon?
Yeah. Well, we felt strongly that we wanted to have both Bitcoin and Ether on the long and the short side, because remember, those two guys are not the same. And look, at ProShares, we're experts in running futures-based ETFs, so please don't ask me about the halvings and the quarterings and things. But I know enough to know that Bitcoin, fixed supply, digital gold type thing, Ethereum ecosystem does other things. So they are different and they don't behave exactly the same way. So they can be very complementary, but it does come back to that simple math that CV were talking about. If you have a volatile thing that zigs when other things zag, it is very valuable in a portfolio, and 2 to 5%, something like that makes sense. But you can just look at this past year. I mean, yes, we can point to the hype around spot, and you can look very narrowly over the last 2 weeks and say, well, interest rates came down. But this whole rally we saw up until just 6 or 8 weeks ago was in the face of rising interest rates, was in the face of this guy with shaggy hair on the news every night. There was not good news in this space, and there was a rally. So I think it can be a very valuable diversifier, and certainly Bitcoin and Ether, which are the 1 and 2, are complementary to one another.
So we're out of time, but I do want to ask each of you to give me one bullet point, and I don't want you to answer in terms of your family and all that. On this topic, what keeps you up at night? So let's start with you, Chris. What keeps you up at night?
What keeps me up at night is the unsettled regulatory landscape, which at some point through these growing pains will hopefully become settled, ideally through regulation. I mean, ideally through legislation, not regulation.
Got it.
Caffeine.
And Stephen.
I sleep well.
There we go. Great. So, ladies and gentlemen, help me thank our panelists, Stephen, Simeon, and Chris. Did a great job. Thank you very much.
Hey guys, thanks for coming out to the 2023 North American Blockchain Summit. It was the best summit yet. We look forward to hosting you again next year. If you enjoyed the summit or like what you saw in this video, be sure to subscribe. If you're interested in learning more about membership in the TBC, go to texasblockchaincouncil.org to learn more.